regulation has been a bit more straightforward. It flows through a regulated intermediary, a bank, a broker, an exchange. Of course, this intermediary is the point of control, point of oversight, point of security. But today, as we all know, we have decentralized exchanges, decentralized assets, smart contracts, AI, new technologies that are redefining and removing the human intermediary. So we're going to talk about how regulators oversee such a market in light of these technologies, and how the market participants can build a compliant system for the future. I have an absolute expert group of panelists next to me, so I'm going to briefly introduce each person before we dive right into it. Of course, right next to me, we have SEC Commissioner Hester Peirce, who also leads SEC Crypto Task Force. We're also joined by Chair Verena from the European Securities and Markets Authority, Margaret Tahyar, partner at Davis Polk in the Financial Institutions Group, and Christine Moy, partner and head of digital assets, data, AI strategy at Apollo Global Management. Let's please welcome our panelists very briefly. Margaret, would love to start with you, if you don't mind, sort of set the big picture before we get into more specifics. As I mentioned, financial regulation typically relies on regulated intermediaries, but given the rise of DeFi protocols, blockchain, AI, how do you see the concept of intermediary changing, and what does that mean for traditional regulatory oversight?
Sure, and call me Meg, because the only person who calls me Margaret is my husband when he's mad at me.
Okay, Meg.
So this is a fundamental shift, right? Because financial regulation has been find the intermediary, make the intermediary do things, either to the user, consumer, or in the marketplace, rely on the intermediary for market protection, market integrity, BSA, AML, and consumer protection. And now all of a sudden, and I'm going to be staying really big picture here, and I know we'll delve into the details later, we're not only having a problem finding the intermediary, we don't know what the intermediary is or what the intermediary looks like. And so you can see from the range of solutions in the various legislative drafts and proposals and leaked ideas that we have out there that this kind of game of what is an intermediary and find the intermediary is in full swing, with lots of good ideas, bad ideas, and medium ideas floating out there. So you have, you have the leaked Democratic draft, which comes in very strong with this concept of the intermediary needs to kind of look, act, and feel like a traditional intermediary, and then you have the various ways that Clarity and RFIA are dealing with it. And I promise you, I'm not going to lead you through the complex provisions. People have said here, none of us understand this act, and none of us have fully gotten to it. And I think that's because there's so many versions going around, and we don't even have the Ag Committee yet. But let me just close by saying that we have to kind of get rid of what I'll call old think. If we keep trying to put where we're going into old boxes, we aren't going to get to where we're going. So the solution here is, I think, twofold. One is to figure out the problem we're trying to solve, and then to solve it only loosely. One of the, I think, the good things about the Clarity Act and the RFIA is they give the SEC a lot of exemptive power. Now, the SEC has a lot of exemptive power now, but there's no way, and those of you who have been around here today with all the tech and all the changes, there's no way we can solve this one. There's no way we're going to come up with perfect legislation. So coming up with a loose framework and then giving the SEC as much exemptive authority as possible so that they can make adjustments in 2, 3, 5, 7 years makes a lot of sense. I mean, last thing I'll say, the 75 million, for example, bucket that's in the draft gives the SEC the authority to change that over time. And we've already seen how thresholds in other areas can become legislative cement. So we need to have that mentality. Let's not have legislative cement. Let's have a flexible system.
Well, the SEC was brought up, so I have to turn to you, Commissioner Peirce, very briefly. Would love your thoughts just more on the challenges and opportunities you're seeing, especially as the intermediary role is changing in crypto and AI-driven markets.
Well, thanks, and thanks for the chance to be here. Richard Gabbert, who is the head of the Crypto Task Force, was supposed to be here, and I would have liked to have you hear from him because he's really thoughtful and he's been working very hard. A lot of the good work that you've seen coming out of the crypto task force has been shepherded by him. So, but because of the government shutdown, I'm the only one who's allowed to work, so here I am. So in any event, I do have to give my disclaimer, which is that my views are my own views as a commissioner, not necessarily those of the SEC or my fellow commissioners. I mean, I think that we are seeing a lot of interesting things happening. One of them is the possibility that intermediaries will be removed, and I think that's a particularly interesting regulatory challenge. I'm excited by it because I think some of the problems that we've all seen so frequently in the financial industry are problems that do stem from the fact that you have intermediaries that sometimes have conflicts of interest, sometimes are outright, stealing from their clients, sometimes are careless, and sometimes don't offer services to a group of people that they don't want to offer services to, but do to another. And so you can eliminate some of that by having peer-to-peer transactions. And I think that's really positive. And I think we need to regulate and legislate and regulate in a way that recognizes the value to the American citizen of having access to these peer-to-peer technologies, having the ability to have truly self-custody, having the ability to interact with others. That will require us to do some thinking, but I think it's something we have to protect. But we're seeing a lot of the innovation ideas coming from traditional and crypto-native intermediaries. And so that, I think, is an area where we're doing a lot of work, tokenizing assets like securities. That's something that we're thinking a lot about. And then also trying to figure out how the intermediaries that we regulate, broker-dealers, investment advisors, can custody assets, can help their clients get exposure to different assets. We're spending a lot of time also on investment management products that have incorporated crypto assets. So I think each of those poses its own set of challenges that we're working through, but it will be helpful as to see where the legislation goes, obviously, but we can do a lot even in the absence of the legislation. We're working on regulation and guidance, some of the guidance you've seen already, but we're continuing to work on those issues.
If we could just stay with you for one more minute, and you actually stole my question, so this is a perfect segue. But the question is part selfish, because I was going to ask you, we've obviously seen so much progress from this SEC, from the Crypto Task Force. Thank you, Commissioner. What are other rules or guidance or areas of focus when it comes to crypto asset transactions that you're focused on?
Well, I think we are looking at custody issues on again, investment advisor, broker-dealer side of things. So there are some challenges there. We're looking at issues around transfer agents and around, when do you have to register as a clearing agency, those kinds of things. And then in the tokenization side, there's been a lot of talk about tokenization, some efforts to tokenize, different people are trying different things. So part of what we need to do is make sure that people issuing tokenized assets are telling people what they're actually issuing so that people actually understand what they're getting access to. And so I think there'll be an effort to work on some exemptions to allow people to tokenize, but making sure that those exemptions are properly conditioned. And then, of course, the age-old question of when is something a security or not a security, that's an area where we're working on guidance and then rulemaking around how can you do a token issuance, and what does that look like? What's the information that needs to accompany that? So those are some of the things that we're working on, but there are many, many different work streams.
Chair Ross, moving over to you. From the European perspective, of course, MiCA provides a comprehensive framework for markets. How do you see AI and blockchain together testing the boundaries of existing EU market structures and supervision?
Thanks, and first of all, also from my side, many thanks for having me here in this all-female American panel. No, it's great to be here, and we in Europe obviously started having a MiCA, Market in Crypto Assets framework, already at the beginning of this year. We're in the implementation period at the moment. And what we are really seeing is that the blockchain kind of technology is transforming markets. It's clear it's happening. And at the same time, you mentioned AI as well. And I think that has similar effects on how customer relationships will develop, how trading decisions will be taken in the future. So there are, both of them, I think, are highly transformative for the financial markets. So it's something that we really are very focused on. Maybe if I can just quickly come back to the market in crypto assets regulation. What we've seen is that a lot of the areas that you are talking about and grappling with are exactly the kind of things that we are also seeing are posing challenges, because when you create a legal framework, you find that, you know, some of the old concepts of how to look at custody, for example, some of the facts of how do you make sure that there's the right operational risk framework around making sure that ultimately transactions are safe and are going through. How can you make that all work in this new technological environment? But there, our view is very much that we need to make sure we take the concepts, the issues around market integrity, investor protection, and just make sure that the activities, however they are conducted, properly meet those requirements. And MiCA is trying to do that for the crypto space. So we are very actively now in the implementation. We're seeing a lot of cross-border big crypto players wanting to come in and basically using the European single market to find customers anywhere in the European Union. And that is creating some challenges as well, because each of the national supervisors now has to use that unique European regime, and we need to make sure that it's applied consistently. And that is one of the areas that we are actively working on as well.
If I could just ask a quick follow-up, narrowing the focus even more on crypto. If you couldn't tell, I'm from the Crypto Council for Innovation, so a lot of crypto-related questions. But how is ESMA approaching regulating a centralized crypto exchange versus a DeFi protocol? You touched upon it, but would love just a little bit more if you don't mind.
Excuse me, sure. So a crypto exchange, you know, fits in some ways a lot of the concepts that a traditional exchange does. It operates differently, but at least, you know, you can kind of tack certain things that we are all familiar with. When you get to pure DeFi, actually MiCA excludes that at the moment. So it's not covered by the markets and crypto assets regulation. Having said that, I think the evaluation of what is a genuine DeFi application needs to be taken really case by case, because very often you still have key players in the system. And so what we are certainly looking at is, you know, where do you draw the boundaries, and how can you make sure that for applications and technological use, which basically still has a responsible person somewhere, that you would still want to tack basically the regulatory and supervisory attention to that.
Christine, we've heard from a private practitioner in law, 2 global regulators. Would love your perspective as an investor, market participant perspective. How are you seeing market infrastructure evolve as AI and on-chain tools are becoming even more embedded in financial products and transactions?
Yeah, sure. I mean, like, I think it's important to note that AI is traveling on a different path than digital assets right now. I know that there's like a subset of people that are working on the convergence of AI and blockchain, and I actually do think it's a real convergence. I actually do think that blockchain payments lends itself incredibly for AI agents to interact with each other, AI chatbots even without the actual agent part. We have been proven to just be really great at programming and, you know, really what is digital assets, like programmable money, programmable assets, right? So I think that eventually comes in time, but it will take a little bit. Blockchain people think about AI. AI people don't think about blockchain at all, unfortunately. But, you know, we are seeing some evolution there. I think most recently you would have seen some of the, you know, announcements from Stripe and Shopify, and, you know, they are absolutely using AI to reimagine the consumer retail experience and over time, beyond just like helping you to find like the best shoes at the lowest cost. Like over time, those agents will also at some point instruct payments, probably through credit card rails. I think like some of the really interesting questions there will be like, okay, when you have AI agents instructing payments or instructing value transfer, like how do you KYC, like, and do AML on AI agents? Do they just like adopt your, you know, sort of identity as like either the entity or the person? Like, I think this is sort of what, Meg, to your point about needing to update the boxes for this future world where it's like, it's changing, and you know, we need to just acknowledge that there's change there, and at least provide guidance on, you know, how AI agents can make payments to each other, and you know, transact on shoes, maybe, right? On the digital asset side, you know, I think similarly, like obviously you've heard a lot about, you know, DeFi and CeFi. You know, I think that there are also, and as a regulated institution, Apollo, like, you know, asset manager, like we try to operate within the confines in which we are currently operating in. But nonetheless, like there are still like challenges where, you know, we have tokenized one of our private credit funds, and we are doing KYC, AML, accreditation, and subdocs exactly the same way that our partners are actually, like, you know, our tokenization partners are doing it exactly the same way that it is done today. And so, you know, sometimes like, you know, I have to explain to my manager, like, yes, it has the same exact process as, you know, as it exists today. And that's great, because that means like we're doing things the right way. And, you know, but then the question comes back like, well, I thought this was digital assets. Like, I thought that this was supposed to be more seamless. I thought we were going to improve the experience. And like, how is that going to happen? I mean, you know, first of all, we all need to like step back and realize that blockchain as a technology is a ledgering technology, not a user experience technology. So it was never going to solve that problem. But I do think that what we hope to see in the next couple of years is, you know, kind of more technologically driven, novel ways to achieve the same thing around proper KYC, AML, accreditation, and onboarding. Something perhaps a little bit more seamless and scalable than what exists today. And that's like at such a basic level, like that is happening right now. You know, like yes, we can like talk about the future where like, you know, robots are, you know, transacting and, you know, trading with each other in crypto. But like, to be honest, today, this is like, you know, really what holds commercial business back. Like the fact that, you know, documents are hard to complete. We need to complete them. Someone needs to complete them. And, you know, it kind of is not exactly compatible with the velocity and the seamlessness of, you know, that people would hope for digital assets and crypto.
I know we were talking about tokenization before, Christine, and you just mentioned a lot of this, but where do you see the necessity for regulated human-controlled intermediaries in tokenized futures? You mentioned KYC, documentation. Are there other areas that you're particularly focused on?
Yeah, I mean, I would say that at this point, all AI and all digital assets have human in the loop. And I think that's going to, you know, exist for some time, especially in regulated financial services. I think maybe, you know, perhaps like consumer experiences may have, you know, may have more flexibility, but definitely as a regulated asset manager, like we have humans in the loop. And I think, I guess my perspective, and maybe this is just me, so maybe we should just get some of the other more crypto DeFi native people up here to talk about it. I mean, for me, as you know, as most of you know, like I've been at Apollo for 3 years. Previous to that, I built and led JP Morgan's blockchain program for a decade. So, you know, certainly like I am coming from a TradFi point of view in that, you know, I see the promise of DeFi technology and blockchain and tokenization not as like the destroyer of the existing financial world, but actually just could we make our own TradFi regulated products faster, more efficient? Can we offer better experiences? So, you know, when I spend my time, you know, world building and architecting like the future, there's always a construct of like there's, you know, some sort of registered investment advisor or some sort of regulated party that is, you know, doing something, may use DeFi rails, but certainly not like a nameless, you know, entity-less technologies, just more like how do we take this technology in-house? How do we have our collaborators and our counterparties take in this technology in-house and just make what we currently do better and more efficient?
Coming back to Commissioner Peirce, I know we talked about tokenization just now with Christine. We're chatting briefly, and you mentioned that's a priority area for SEC as well. Are there specific considerations that you're focused on with tokenization from the SEC perspective?
Yeah, there are a lot of different things. I mean, there are a lot of mechanisms that people have suggested to deal with or to tokenize. So we're thinking about, wanting to give people the opportunity to try those different models, let the market pick the model that it likes. But I think there are a number of challenges. We've heard from a lot of TradFi folks who are very concerned that tokenized securities will get a pass on existing securities laws. And so, thinking about how does regulation NMS interact with tokenized securities? So there's some difficult questions there. Trying to make sure that, again, people understand what they're buying. So working on disclosure issues to make sure that the issuers of these tokenized securities are telling people what the purchasers are actually getting. And then thinking about what the actual thing is. Once you tokenize an asset, it can change into something else. Are you creating a security-based swap, which has different rules around it than a regular security has? So those kinds of things are some of the issues that we're working with.
Meg, you, of course, advise financial institutions on a daily basis. What are some of the foundational legal and contractual assumptions that you're seeing that are being most challenged by the increase and rise of on-chain finance, AI, and all the things that we just discussed?
That's a very big and very hard question. And I'm hoping that some of the other panelists will chip in and we'll get a little interaction on this one. And I think everywhere and everything is probably not the right answer, except it is probably the right answer. There are a surprising number of contractual questions. Who contracts with whom? If you put in place a wallet in your TradFi, how do those contracts work? There are a surprising number of insolvency questions, right? Particularly in DeFi, when you're thinking if the cash leg is not part of the if-then protocol, which is my term for smart contracts because they're not really contracts. I think of them as an if-then protocol. And if you think about the Synapse Evolve situation, which of course did not involve digital tech, distributed ledger technology, and it would have been better if they'd had it, right? Because there you've got old-fashioned record keeping that people aren't able to keep track of. And then you just have the entire panoply of, what Commissioner Peirce was pointing out of all of the traditional securities laws, all the traditional commodities laws, and all of the traditional banking laws. And if you take a look at the Clarity Act and the RFIA, they're smushing them all up together, and you can't understand it unless you're cross-reading the Securities Act, the Securities Exchange Act, the Commodities Modernization Act, the National Banking Act. And, that's just gets me back to everywhere and everything, but I'd be interested in others' points of view here because I'm sure there are many.
Any takers? Anyone want to react to what Meg just said?
I mean, I think the insolvency issues are really important for us to think about, so I'm glad you raised that.
And which leads us, again, I'm only in CFI here, leads us to questions of resolution and resolution planning. And you think about that, much simpler for stablecoin issuers than it would be for a traditional bank. But, insolvency is thinking about insolvency is like thinking about prenups when you get married, right? It doesn't mean you're going to get divorced, but it does mean you pre-plan what happens.
I don't want to put you on the spot, Meg, but you brought up bankruptcy, which is, I agree, a very important topic. Do you see that as an overhaul of the existing U.S. bankruptcy code, changes in specific provisions, or too early to tell as to how to address this?
Well, there were some changes in specific provisions in the Genius Act, right, in order to put the stablecoin holders above others in the bankruptcy so that they're not caught in a long liquidation. Other than that, I think, and then there's stablecoin issuers, you have to think about what they're going to do. And then we actually have had one occurrence, although we've all forgotten about it, of a centralized exchange going bankrupt. and that took a very, very long time. And there's, I don't know the specific provisions, but there's got to be an easier way to do it.
I don't mean to make this a bankruptcy topic, but I would love your thoughts, Chair Ross, if you have any on just how the EU is focused on insolvency, bankruptcy for centralized exchanges or beyond.
It's a really tough topic, and I think we're grappling with exactly the same things over on the other side of the pond, because you have these. A lot of the questions are, how do you actually deal with these type of issues around contract law, insolvency law, and what is a settlement finality?
Oh dear, oh dear.
Exactly. So there are plenty of these issues, and we are exactly grappling with the same issues of how do you make sure that actually the existing legal concepts that provide, after all, the security and the safety to the people who are investing in these products, how can you make sure that actually that translates across?
Well, I'm going to stop the bankruptcy questions here and move on to disclosures. But turn to Commissioner Peirce. Do you think the traditional disclosures, SEC's traditional tool, is sufficient in a world where we have, again, AI models, on-chain protocols, where they're operating as market actors themselves?
Well, I think the SEC's rules are designed to be, materiality based, and so it kind of depends which disclosures you're talking about it. But I do think that if we're talking about our product disclosures, those can really get at what is it that you're buying. I think one of the areas we've run into trouble is when we're talking about, you want to do an initial coin offering, and what do you use as your framework there? I think there we need to think about what information people actually need to get. You can't just shove it into one of the existing models that we have. So I think there's work to be done there. I think I can't not mention the fact that the technology itself has the ability to radically change the way that we do disclosure. Chris Brummer has written about this. So we were just talking about that before I came up. And so I think that we should look at the positive side too. There are going to be challenges, but there are going to be new possibilities with this technology also.
I want to leave a little bit of room for questions in a few minutes, but going back to Christine, you explained Paul's perspective on a lot of these issues already, but how are institutional investors evaluating both opportunities and risks when allocating strategies that are built on decentralized infrastructure or, again, AI?
Yeah, I mean, I would say, it looks like any other investment that we're going to do, which is what is the business value creation opportunity? How is it going to scale, right? I mean, I can't tell you how many times people try to just pitch me something that is like this very novel technology, but it's like, okay, but what is it? What are we going to get from this technology? Like, what's the follow through? How does this actually get implemented and adopted, right? So, that's really important to us, and kind of the way that we see that, or the way that we try to discern that is, we like to be a really involved, hands-on user of the technologies that we invest in. And, oftentimes, like, there is occasions in which we cannot get comfortable using, really early technology, but at least we'll give direct feedback as to why we could not get comfortable. Like, this is sort of the value proposition that we try to give to some of the companies that we, invest with. I think that the regulatory risk is, like, always, especially in decentralized protocols, like, always is kind of like top of the list. I actually have an investment partner where literally, like, this is like his number one question all the time, and it's like the first question always. Like, okay, well, like, what is the regulatory risk on this, and like, what do we think? And, I think for us, whilst we have been able to invest in some decentralized technologies, our expectation is, if it looks like it should be a regulated activity, that this team will actually go forth and, like, try to get regulated or try to partner with regulated entities or be, sort of a software solution for regulated entities, right? So, like, we're not yet at the point, I don't think we'll ever get there at the point where it's literally like, well, YOLO, it's DeFi. Like, we can just do whatever we want here, right? I think maybe there are some investors who have, and certainly there have been, in the near term, significant gains for them. But for us, where the prize is real world mass adoption, like the real market, like broad scaled markets that we operate in today using these technologies. Having regulatory clarity, not engaging in regulatory arbitrage is important to us because that like means you can actually like get the prize of like the world that we see, as opposed to, you know, kind of the small world that exists today. So anyway, definitely evaluating risks on all fronts. You know, we haven't talked about it, but you know, certainly the second #1 question outside of regulatory risk is like smart contract risk. I mean, this is also very nebulous. Like people are always like, it's like, why can't we put like hundreds of millions of dollars into the DeFi protocol? Like, let's do it. Like, sounds amazing. And it's like, well, I guess there could be smart contract risk. There could be hacker risk. And it's like, what is that? Like, how do you, you know, quantify that? Obviously, like, you know, responsible parties will do many different types of audits, technology and cybersecurity audits. But I think we've seen like that risk is very prevalent and like a real thing that we just need to learn to coexist with in this world.
Commissioner Peirce, did you
Yeah,
want
I
to say
just
something?
wanted to weigh in, not on the smart contract risk. I think it's really good to have people like Christine out there testing these different products that people are trying to build and asking those questions. I think they're important questions to ask. But I also think we need to figure out a way to enable the market to be able to test products without having people jump into the full regulatory panoply, because it is really difficult for a small project. I mean, we've seen that on the state level where projects have had to go to all 50 states to get licenses to do things. And so I think one of the things that we have the ability to do, and Meg mentioned this earlier, the importance of giving the SEC exemptive authority. We have a fair amount of exemptive authority already, but I really think that is to be able, one of the purposes of that is to allow people to start on a small scale, see whether there's market appetite for something, and then try to figure out, okay, what does the long-term regulatory solution look like? And so I think you've heard Chairman Atkins, who was here yesterday, talking about innovation exemptions, and that's really what we're trying to get at. How can we enable people to try things without having to just jump into the full SEC rulebook, which is really daunting?
And I would add, preemption is also a beautiful thing in this area.
No, I just wanted to come in to say that is also one thing that we have been trying to do in Europe. We have a DLT pilot regime, actually, which was introduced a couple of years ago. It hasn't really had the take-up that we originally imagined. We have a few projects, but they are quite small and so on. And when we asked for feedback, so what is it that's kind of not appealing? Why are you not using that? Obviously, regulation does come up from time to time, but what has also come up interestingly, and it talks a bit to what Commissioner just said, is the fact that you need to create a kind of sandbox approach where you can actually also see some future and you are not putting too tight thresholds on it. So we as ESMA just provided some feedback to the co-legislators, basically saying, if we want to prolong this pilot regime, let's try to make it a bit more flexible, because people also need to see prospect in their projects. And if you make it too tight, it might give you a few of the reliefs, but if you can't see it grow, then it just won't take off.
And I mean, not to be greedy, but the ideal would be if we could let some of these pilots happen cross-border so that they could do something in the EU, they could do something here at the same time, and we could share the wisdom that we get from that. But I've also heard that even the process of going through the application to be part of a pilot program can be just not worth it. And so we have to be very careful in how we think about designing programs. I'm sure that's something that you all are thinking about as well. You know, dealing with a team of technologists who haven't had a lot of hours with their lawyer is a very different thing than dealing with a lot of the people that we normally deal with in the TradFi world.
I thought we were about to have breaking news about a new cross-border pilot here, but So I have a lot more questions about preemption, even about what ESMA is thinking about with caps and national competent authorities. But I want to leave a few minutes for the audience to ask questions. We have about 5 minutes now. So if you have a question for a panelist, please, Daniel, if you don't mind.
Hi, love to see the full panel of women in finance. I'm currently a master's student at Wake Forest University. I'm obtaining my master's in financial technology. So I'm practicing deploying smart contracts, tokens for different case scenarios. So I guess in this time, what would you suggest someone trying to get into developing these technologies the right way, ethically, for different case scenarios? As a student, how would you suggest them diving into this shifting financial world of a market?
I mean, I would just point to what Christine said, which is identify a problem that needs a solution and set out to solve that problem. I mean, that's the beauty of our system, right, is that people who are entrepreneurs are problem solvers, right? And so really applying that same mindset here.
I guess I would say I have 3 grown sons who all are at that entry level, and it is so hard these days. It's just completely different getting your first foot on that first rung of that first ladder. I think no one with gray hair in this audience can understand the stress unless maybe you're a parent. I would suggest also getting yourself as conversant in AI skills that will help as you possibly can. That is, essentially where the futures are going to converge. And if in making the technology, AI can help you, and you know how to speak to old people like me who need help in that, it'll be easier to get your first foot on that ladder.
And lastly, in the crypto ecosystem at large, there are tons of different projects and companies. They're all quite young, and they can all use a lot of help. And so, just finding a project that resonates with you or problem statement that resonates with you, as Commissioner Peirce said, and then, kind of offering to help. And, I have found the crypto ecosystem to be super collaborative, super open, and, willing to take in like as many, sort of people or participants, community members as possible. So yeah, definitely just go find some projects that you're interested in and reach out to them directly.
Question over there.
Hey, thanks a lot for the great panel. One quick question on the DeFi side. I've seen a lot of focus on the consumer-facing side of the equation. But is there any thought on the clearing and settlement side where the on-chain settlement is much more transparent, is kind of final? So, for example, like chain like Ethereum, can it substitute against requirements for DC or DTCC and clearing side on the European side, Euroclear?
Yeah, I mean, the fact is, talking about finding solutions to problems, not problems to solutions. I think the post-trading area is clearly one where there is a lot of potential, because in the end, there's not only the speed and efficiency you can gain, but there's also the fact that you take risk out of the system by being able to clear and settle immediately. And atomic settlement, problems articulating today. It's clearly something that is the kind of area that everyone is looking at to try to ultimately make sure that clearing and settlement is more efficient and can support much faster, much more efficient and more liquid trading in the end.
Thanks, y'all, for being here. You're fantastic. I don't know, Commissioner Peirce, if you can speak more to this or not, but yesterday Chair Atkins talked about a new project management system to handle and kind of organize all of the exemptive relief requests that are coming in and guidance relief requests that are coming in, and manage it across divisions and kind of keep everything orderly and on time. Is there anything more you could talk about, like how that might work, and if it has started And I don't mean to put you on the spot if it's
I mean,
not something you can speak to.
No, I mean, I think the crypto task force is trying to help to shepherd things through the building. I mean, a lot of the work is done by the staff in the different divisions. It is helpful for us, I mean, I guess just for people who are interested in availing themselves of some sort of an exemption or trying to get a no action letter, give us as much information as you can, and sort of you can probably guess some of the questions that we'll ask, and so be prepared to answer those questions, and then we will try to get those sent through the system. We have, so if you email crypto@sec.gov, when we're not shut down, there's normally someone on the other side of that who is one of the most efficient people that one can imagine, and someone who thinks a lot about process, and so she's been thinking a lot about these kinds of issues.
Can I maybe just add something which is not, I mean, coming from outside the US? One thing that we are actively looking at, how can we as supervisors and regulators also deploy some of the technology that is now there, whether that's AI, whether that is other technological help, basically. And we're looking at that actively. We're trying to make sure we learn from each other. So it's also about cross-border exchange on those type of topics. And you can see it, whether it's market abuse monitoring, whether it is, being more efficient in answering some of the questions and helping with the experience vis-a-vis the supervisor. All of that is really important for us as well.
And then one other thing I'll add is there's been some talk in the legislation of having some sort of an ombudsman, and I think that could be helpful not only with respect to crypto, but more generally. I have seen so many instances in my now very long time at the commission of people coming in with an idea, and the idea just gets bounced from division to division, and it's very, very frustrating, and especially if you're depending on funding that's running out and you're bumping up against a deadline. And I think having someone to have the assigned role of shepherding stuff through could be quite helpful, and I know that Chairman Atkins has been thinking about that as well.
I see Daniel looking at me, which is a sign that we wrap this up. But can everyone please join me in just thanking our amazing panelists today?
Great. Thank you so much to the panel and to G and Chris. I mean, you heard it incepted here, the EU-US sandbox. Fincella. All right, we're going to take a break until 3:40, and we'll be back for our last panel.